Welcome back. There is rising concern that South Africa could be facing a credit rating downgrade. Standard Bank said today that a rate cut was imminent. Standard & Poor's and Fitch are both giving country reports next week, and both already have South Africa on a negative outlook. Now, rate cuts reflect investor confidence, and a downgrade could raise government's cost of borrowing. Let's get a quick investor view from London. We're now joined by Nomura's Peter Attard Montalto. Thank you for joining us. Peter, do we face a cut?
Well, I think it's very important to consider that both Fitch and S&P look at South Africa in quite different ways. S&P really have been itching, if you like, for a downgrade for quite some time after Marikana. Especially, they've been looking in particular at a broad range of factors from the current account, the labour situation, growth, the fiscal situation. But it still feels like it's a little bit too early for a cut at this time. It may happen after the MTBPS, after we get more detail from the government at the end of the year, but certainly sometime this year a cut probably is on the horizon.
How much is the strike on the platinum belt, warnings of more strikes adding to that concern that we may be facing a cut in the next few months?
Well, the platinum strike in and of itself, we should remember, is quite a small part of the real economy, but very important in terms of the nominal picture for the overall economy. So really, it's not just about that for the for the rating agencies. It's also about the NUMSA strike that's probably coming up in July. It's about the general labour market dynamic. It's all these factors coming together which are really concerning the rating agencies.
Peter, we hear that global investors are concerned, but then you see a report like this week, A.T. Kearney, which said that we've moved up to 13th place in the world when you consider foreign direct investment. So are we seeing too much of the doom and gloom, not focusing on the fact that we still seem to be attractive to investors right now?
Well, I think you have to separate out different sorts of investors. So for portfolio investors, people who buy South African government bonds, actually a downgrade is probably already priced in. It's already in their minds. And equally, in terms of equity market investors, they know the risks in South Africa quite well already. It's sort of the better the devil you know theme, we call it. But for FDI investors and the report that you mentioned, that doesn't quite sort of chime with what we see when we talk to those FDI investors. We still see a lot of concern about microeconomic policy in South Africa. I mean, on the numbers overall, we can still see South Africa underperforming many other countries in the region in terms of the amount of FDI it's getting.
And we have seen the rand fall, some concerns this week around NUMSA, a whole lot of other factors at play as well. But just give us more details of how investors are viewing us, especially in light of government's intervention, which I understand was widely welcomed, this proactive stance, at least on the strike.
Well, the rand basically has been very volatile as a result of global factors, the Fed and from the US on the one hand, the ECB and their additional easing on the other hand today. But we basically had foreign investors actually thinking more about weak growth, more about the risks in the economy than they were a couple of months ago. And that's why the currency really has been weakening back. And that's why we do expect there to be a rate hike coming at the next meeting of the SAB in July.
All right, thank you so much for your time this evening, Peter Attard Montalto, an emerging markets economist at Nomura. And unfortunately,